Welcome to The Explainer. Today we're diving deep into a chart pattern that honestly traps most new traders, equal highs. But by the end of this, you're going to see this pattern in a totally new light. Not as a trap, but as a massive trading opportunity once you understand what's really happening behind the curtain.
So let's kick things off with a scenario that I bet feels painfully familiar. You spot this really clear resistance level, right? You do the safe thing and place your stop loss just above it. And then, bam! Price spikes up for a split second, takes you out of your trade, and then immediately reverses and goes exactly where you thought it would. It is so frustrating, but here's the thing. It is not random.
The reason you keep getting caught in that trap, it often comes down to this one specific pattern called equal highs. And trust me, once you get this, you can start turning that frustration into a profitable strategy. So, what are we talking about here? On a chart, it literally looks like a flat ceiling that price just can't seem to break through. Now, most traders see this and their brain screams, strong resistance. But what if I told you that ceiling isn't a barrier at all? It's actually a target.
Okay, so spotting these things is actually pretty straightforward. First, you're just looking for two, maybe more, distinct peaks that hit roughly the same price. They don't have to be perfect to the penny, but they need to form a really obvious horizontal zone. And this is key. You have to see this pattern within the bigger story the market is telling. Context is everything.
Now, let's get to the really juicy part, the reason why this pattern is so incredibly important. See, it's not about the resistance level you can see, it's about what's hiding just above it.
And this right here, this slide perfectly illustrates the two completely different mindsets in the market. On one side, you have the retail trader thinking, perfect, a safe place to hide my stop loss. But on the other side, the big institutions, the smart money, they're looking at that exact same level and seeing a giant, predictable cluster of orders, a pool of liquidity just waiting for them. So here's the crucial point. Every single time a trader places that safe stop loss just above those equal highs, they're actually helping to build a bigger and bigger target. It's this collective behavior, right? It's driven by all the same trading books and courses that makes the area a super predictable honeypot for anyone with enough capital to move the market.
And this is that honeypot. A liquidity pool is exactly what big banks and hedge funds need to operate. You see, to fill their massive orders without sending the price haywire, they need a whole lot of people on the other side of their trade. And where can they find a huge number of guaranteed sellers? You guessed it, right where everyone has placed their stop-loss orders.
Okay, let's move on and actually watch how this hunt for liquidity plays out on the chart. This is where the trap is finally sprung.
This aggressive move actually has a name. It's called a liquidity sweep, or sometimes a stop hunt. It's that sharp, sudden spike that looks like a breakout, but it's really a calculated maneuver designed to trigger all those orders that are just sitting there, right above the equal highs. It happens in four pretty predictable stages. First, the pattern forms, and that attracts all the stop losses. Then, the price intentionally gets pushed just past those highs. This triggers all the stops, which provides the liquidity for the big players to fill their orders. And finally, with their mission accomplished, the price reverses hard, leaving everyone else trapped.
This is so important to remember. You do not want to be the one providing the liquidity. So instead of seeing equal highs as your signal to sell right away, you need to see them as a warning sign, a clue that a liquidity sweep might be on its way. Your job is to wait for the market to show its hand.
All right, so now that you know how to spot the trap, let's talk about how to actually use this knowledge to your advantage. It's time to stop being the hunted and start trading right alongside the hunters.
The number one rule here is patience. You absolutely have to wait for that sweep to happen first. Then you start looking for confirmation. Did a huge bearish candle just form right after that spike? Did price slam down and break a recent low, showing you the momentum has shifted? These are the clues that tell you the reversal is for real.
Now, if you want to stack the odds even more in your favor, look for confluence. So, if you can find a bearish order block hanging out near those equal highs, that's an incredibly powerful combination. A really high probability entry is when price sweeps the highs, reverses, and then pulls back to test that order block. Look, your biggest enemy when you're trading this setup isn't going to be the market, it's going to be your own brain. That fear of missing out, or FOMO, is going to tempt you to sell before the sweep happens. Impatience will make you jump in without waiting for any confirmation. And bias will make you try to short this pattern even when you're in a massive bull market. You've got to fight those urges. And when you do finally enter a trade, where should your stop loss go? Well, here's the golden rule. Place it above the highest point of the wick that did the sweep. That puts your stop safely outside that volatile zone and protects you from the very move you were waiting for.
So, to pull all of this together, let's build a simple little pre-flight checklist that you can run through before you even think about placing a trade based on this idea.
Okay, first box to check, market structure. Look at a higher time frame. Is the overall trend on your side? Second, liquidity sweep. Have you actually seen a clear sweep? Look for that long telltale wick. Third, reversal signal. Is there hard evidence of bearish intent? And finally, confluence. Is there anything else, like an order block, that strengthens your case? If you can tick these boxes, your odds just went way, way up.
And that right there, that is the fundamental shift in perspective that changes everything. When you learn to see the market through the lens of liquidity, you stop seeing barriers and you start seeing targets. So the next time you spot that perfect price ceiling, just ask yourself that one simple question. It'll help you stay out of the traps and start finding much, much better trades.